Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're delving into what the big banks are saying about tariffs, interest rates, and housing in light of recent announcements from the United States. After a month-long pause, a 25% tariff on goods imported from Canada to the United States is set to go into effect, alongside a 10% tariff on energy products like oil and electricity. This tariff will be in addition to the 25% tariff on aluminum and steel imports from all countries, which was confirmed back in mid-February. Economists with Canada's Big Five banks are expressing concern over the potential impacts of these tariffs. According to TD economist Rishi Sandhi, the duration of these tariffs could significantly affect the Canadian economy. A prolonged trade war could hamper growth until 2026, whereas a shorter period might allow for a quicker rebound. He highlights that even temporary tariffs could thump the Canadian economy just as it's on the mend, especially after stronger than expected fourth quarter GDP data. In light of this, markets have adjusted their expectations for the Bank of Canada's interest rate decisions. While there was initially a 50% chance of a rate cut on March 12th, the prospect of a trade war might solidify this decision. CIBC and BMO economists, however, are suggesting that if no trade war materializes, the central bank might hold the policy rate steady at 3%, citing recent GDP strength as a supporting factor. The potential for retaliatory tariffs from Canada could also play a role in future interest rate decisions. Scotiabank's Derek Holt warns that if Canada imposes its own tariffs in response, the Bank of Canada might have to consider rate hikes due to inflationary pressures. This is a scenario that could lead to a very different economic environment than initially anticipated. Beyond interest rates, tariffs are also expected to impact the housing market. Scotiabank economist Patrick Perrier points out that the uncertainty surrounding tariffs has already affected housing market activity, with potential buyers hesitating in January as they awaited tariff announcements. This uncertainty could linger, impacting housing demand and market conditions in 2025. RBC's recent housing commentary echoes these sentiments, noting that any economic turbulence from tariffs could destabilize housing market confidence. This is crucial as housing market conditions are closely tied to labor market conditions, and we're already seeing some signs of tariff uncertainty affecting job data. RBC economists Nathan Jansen and Abby Shu mentioned that while employment rose in January, the unemployment rate remains higher than a year ago, indicating potential strain on the labor market. As we look ahead, the uncertainty of tariffs continues to cast a shadow over both the economy and the housing market. We'll be keeping a close eye on developments and how they might influence the Bank of Canada's decisions moving forward. Stay tuned for more insights as we navigate these complex economic conditions. The federal government is set to make a significant housing announcement in Ottawa, according to a media advisory released today. This announcement, scheduled for tomorrow, is expected to address pressing issues within the housing sector, reflecting the government's ongoing commitment to tackle housing affordability and availability challenges across Canada. While the specific details of the announcement have not been disclosed, it's anticipated that the government will outline new measures aimed at improving housing affordability and increasing the supply of homes. This comes at a time when many Canadians are struggling with high housing costs, and there's a growing need for affordable housing options. The announcement will be made by key federal officials, including the minister responsible for housing, who will provide insights into the government's strategic approach to addressing these challenges. The media advisory indicates that the announcement will take place in Ottawa, highlighting the importance of this issue at a national level. As we await further details, this announcement could potentially have wide-ranging impacts on the real estate market and mortgage industry, affecting everything from interest rates to housing availability. It's an important development to watch, as it may influence future policy decisions and market conditions. We'll continue to monitor this story closely and provide updates as more information becomes available. The government's efforts to address housing challenges are crucial, especially in light of recent economic conditions and the ongoing demand for affordable housing solutions across the country. According to the latest data from the Calgary Real Estate Board, home sales in Calgary experienced a notable decline in February, falling by 19.3% compared to the same period last year. Despite this drop, sales remained above the typical levels for February, indicating a resilient market amidst changing conditions. In February, a total of 1,721 homes were sold, a decrease from the 2,132 homes sold in February 2024. This decline comes as the residential benchmark price increased to $587,600 Canadian dollars. This price represents an approximate 1% increase from February 2024 and has remained relatively stable compared to the end of the previous year. The inventory of available homes has seen substantial growth, with 2,830 new listings in February, marking a 4.4% increase from a year earlier. This growth has pushed the city's total inventory to 4,145 homes for sale, which is a significant 75.6% higher than in February 2024. This marks the second consecutive month of large year-over-year supply gains, notably driven by an increase in apartments and townhouses priced under $500,000 Canadian dollars. Alan Tennant, President and Chief Executive Officer of the Calgary Real Estate Board, has highlighted that the seller's market, which has been prevalent for the past 2 to 3 years, is beginning to ease. This shift is causing the pace of price growth to slow, offering potential buyers more options and potentially stabilizing the market in the near term. The changes in the Calgary housing market reflect broader trends that could have implications for other regions. As the market adjusts to increased supply, it will be important to watch how these dynamics influence pricing and buyer behavior moving forward. With affordable units becoming more available, there may be opportunities for buyers who were previously priced out of the market. In Georgina, Ontario, a new initiative is set to accelerate the construction of homes as part of a broader effort to tackle the housing crisis in Canada. The Government of Canada and the town of Georgina have reached an agreement to fast-track the construction of 210 homes over the next 3 years. This initiative is part of the second round of the Housing Accelerator Fund, which aims to expedite the building of 112,000 new homes by 2028 across Canada. The Housing Accelerator Fund is projected to lead to the creation of over 750,000 new homes nationwide over the next decade. The agreement will allocate over $5.8 million to the town of Georgina to eliminate barriers to housing development. This funding is contingent upon local governments preparing action plans to unlock the funds, with subsequent payments made upon achieving specified results. The goal is to encourage municipalities to think ambitiously, with strategies that could include increasing housing density, reducing project timelines, and promoting affordable housing. Georgina's action plan outlines 8 local initiatives, including changes to the town's zoning bylaw to permit increased density and different building forms. For instance, the new zoning rules will allow up to 4 residential units per property. Additionally, Georgina will introduce an incentive program for affordable housing and streamline the process for development and building permit reviews, particularly for affordable housing and purpose-built rental developments. The town is also planning to update bylaws to facilitate the construction of additional dwelling units, or ADUs, and will launch an incentive program to encourage their development. Moreover, Georgina will implement various systems efficiencies, such as a development tracking system, to enable electronic permitting and streamline development approvals. Federal officials, including Nathaniel Erskine Smith, Minister of Housing, Infrastructure and Communities, have emphasized the importance of removing barriers and cutting red tape to enable housing development. Meanwhile, local leaders, such as Margaret Quirk, Mayor of Georgina, have expressed gratitude for the federal support, highlighting the importance of affordable housing in building a thriving, inclusive community. This initiative is part of the larger National Housing Strategy and Canada's Housing Plan, which represents the most ambitious federal housing plan in over 40 years. The Housing Accelerator Fund, launched in March 2023, has been bolstered by an additional $400 million in Budget 2024, bringing its total funding to $4.4 billion. This program is part of Canada's ongoing efforts to make housing more affordable for Canadians, prioritizing those in greatest need. In today's real estate landscape, renters in Ontario, including those in Mississauga, are finding that their rental payments could have been redirected toward homeownership, according to a new report by real estate brokerage Zoocasa. This report examines the financial implications of renting versus buying in various Canadian cities, using data from rent.ca on average one-bedroom rental prices from 2020 to 2025. Zoocasa's analysis reveals that the total rent paid over this 5-year period in every major Canadian city could have covered the down payment needed for a home, sometimes even 2 or 3 times over. In Mississauga, for instance, the average rent for a one-bedroom apartment was recorded at $2,264 as of January 2025. Over 5 years, this amounts to approximately $120,000 spent on rent, which is $40,000 more than the down payment required for the average home in Mississauga, estimated to be just under $80,000. The report further highlights that in more expensive markets, such as Toronto and Vancouver, renters could have put a minimum down payment on a home priced over $1 million with just 4 years of rent. This underscores the financial challenges faced by renters in these high-cost areas. Conversely, in mid-range cities like Ottawa, Hamilton, Calgary, Montreal, Kitchener, and Halifax, renters could have saved the equivalent of 2 to 3 down payments over the same period, making homeownership more attainable. In more affordable cities like Edmonton, Winnipeg, Regina, and Saskatoon, 5 years of rent could cover 3 to 4 down payments, allowing renters to potentially purchase a home multiple times over or make a substantial down payment to reduce overall costs in the long run. For those with the flexibility to relocate, choosing a more affordable rental market can significantly enhance long-term financial planning. Zoocasa suggests that cities like Edmonton and Calgary, where the average monthly rent is lower, might offer renters more disposable income for savings or investments, thus accelerating the path to homeownership. For example, in Edmonton, with an average monthly rent of $1,362, a renter could afford a home sooner with a minimum down payment requirement of just $21,568. Additionally, there are programs available to help renters save for a down payment. The First Home Savings Account, for instance, is a tax-advantaged account that allows first-time homebuyers to set aside funds specifically for a down payment. Furthermore, Canada has lowered down payment requirements for homes up to $1.5 million, which previously required a 20% minimum down payment. This policy change aims to reduce the upfront cash burden for buyers in high-cost markets, making homeownership more accessible. The latest Equifax Canada Q4 2024 Market Pulse Consumer Credit Trends report reveals a concerning rise in mortgage delinquencies across Canada, with the exception of Alberta. According to Rebecca Oakes, Vice President of Advanced Analytics at Equifax Canada, the total consumer debt in Canada reached 2.56 trillion Canadian dollars at the end of 2024, marking a 4.6% increase over the previous year. This rise in debt levels is largely driven by non-bank auto loans, which saw an 11.7% year-over-year increase, while the average non-mortgage debt per consumer reached 21,931 Canadian dollars, surpassing pre-pandemic levels. Despite some Canadians experiencing financial improvements due to lower interest rates, many are feeling the strain of high living costs and mortgage renewals with higher payments. This is particularly evident in regions like Ontario and British Columbia, where mortgage holders are facing intensified financial pressures. Oakes notes that while the numbers may not seem alarming at first glance, a deeper look reveals many are struggling with the increased costs of living and mortgage renewals. The report highlights a significant surge in the 90-plus days mortgage balance delinquency rate in Ontario, which increased by 90.2% year-over-year to 0.22%. On the other hand, Alberta is the only province to see a decrease in delinquencies, with a 3.6% reduction. Meanwhile, British Columbia experienced a 37.7% increase, Quebec saw a 41.2% rise, the Atlantic provinces reported a 5.7% increase, and Manitoba and Saskatchewan recorded a 0.6% uptick. The Bank of Canada's decision to lower its overnight rate to 0.25% in March 2020 led to a reduction in prime rates by banks, but many homeowners who took out mortgages during this period are now facing financial risks as these mortgages come up for renewal. Despite recent reductions in rates, mortgage rates remain significantly higher than the ultra-low levels seen during the pandemic, posing challenges for many. Oakes points out that around 1 million mortgages due for renewal in 2025 originated from the low interest rate environment of 2020. These borrowers are likely to face significantly higher payments, with a quarter of mortgage holders seeing their monthly payments increase by over $150 Canadian at renewal in the fourth quarter of 2024. Although the Bank of Canada has cut its benchmark interest rate from 5% to 3% since June 2024, easing some financial strain, the average 5-year fixed mortgage rate remains at 4.29%, down from 5.22% a year earlier. While these rate reductions offer some relief, today's rates are still much higher than the sub-2% levels that fueled a real estate boom during the pandemic. Oakes emphasizes that the numbers indicate more consumers are struggling and the delinquency rates are not showing signs of slowing down. Revel Realty has entered the North Bay real estate market with a fresh, modern approach, led by local real estate broker Jessica Diggles. With a vision to redefine real estate in the area, Diggles aims to create a brokerage that not only focuses on property transactions, but also fosters a collaborative and innovative environment. "I wanted to open up a different kind of brokerage," Diggles explains. "I didn't want to be completely independent, but I also wanted to offer something unique to North Bay." After spending a year exploring her options, Diggles partnered with Revel Realty, a rapidly growing brokerage headquartered in Niagara with over 35 locations across Ontario. Her decision to bring Revel to North Bay was followed by the selection of a location that could contribute to the downtown revitalization efforts. The property at 138 Main Street West was chosen for its potential to serve as a modern collaborative space, hosting community events and seminars, and advancing professional development within the industry. The North Bay office, which opened in mid-February, is designed to be an innovative and flexible workspace. "This is a hybrid space," Diggles says. "Agents aren't stuck in cubicles. They can move around, work from different areas, and collaborate. It's open concept, minimalist, and designed to be comfortable and functional." This setup is intended to foster a culture of collaboration and continuous learning among agents, blending seasoned professionals with fresh talent to support one another. Opening a new real estate brokerage comes with its share of challenges, and Diggles has embraced the opportunity to set up during a slower season for home sales. This timing has allowed her to manage the transition effectively, coordinating renovations and setting up operations. "I've had my hands full here," Diggles admits, "but it's really like building a house. You just have to set up the contractors and have a good team on your side to support you." Currently, Diggles has a team of 7, including 6 agents and a brokerage administrator. She plans to expand but remains selective in her hiring, seeking individuals who are open to collaboration and learning. Diggles emphasizes the importance of digital marketing in today's real estate industry, noting a shift from traditional methods. "Real estate used to be 80% negotiating and 20% marketing. Now it's flipped," she notes. Revel Realty North Bay prioritizes high-quality digital listings, professional video tours, and social media engagement to showcase properties effectively. Despite the timing, the real estate market in North Bay has been heating up, with an early spring market providing opportunities for growth. Diggles has noted an increase in people moving to the area, particularly from southern Ontario, attracted by the affordability and availability of recreational waterfront properties. "Last year, about half of my clientele were new clients," she says, "and they were all coming from southern Ontario." The response to Revel Realty's arrival in North Bay has been overwhelmingly positive, with clients in the community appreciating the fresh and modern approach. A grand opening celebration is planned for May to welcome the public into the space and highlight Revel's commitment to the community. Now let's take a look at our Ontario House of the Week, a stunning renovated Victorian home in the trendy Toronto neighborhood of Little Portugal. This property, located at 129 Beaconsfield Avenue, is listed at $2,849,000 Canadian dollars and offers a blend of historic charm with modern luxury. This semi-detached home sits on one of the most sought-after streets in Beaconsfield Village, which is known for its vibrant community and proximity to downtown Toronto. Originally built as a Victorian, the home was completely gutted and rebuilt in 2020, ensuring that it meets modern standards while retaining its classic appeal. The home features 4 bedrooms and 5 bathrooms, spread across a well-utilized floor plan. The main floor boasts a custom kitchen equipped with high-end Thermador appliances, 10-foot ceilings, designer light fixtures, and beautiful hardwood flooring, creating a warm and inviting space for entertaining. On the second floor, you'll find 3 spacious bedrooms, a convenient laundry room, and 2 washrooms. The primary suite, however, is a highlight of the home, occupying the entire 3rd floor. It includes a luxurious 5-piece ensuite bathroom with a steam shower and soaker tub, a walk-in closet with a dressing area, and a private balcony. The basement offers heated floors and provides a blank canvas for new homeowners to create a space that suits their needs, whether it be a recreation room, home gym, or additional living area. Additionally, the property includes a detached 2-car garage and qualifies for laneway housing, adding further value. This home is not just about the interiors. Its location is prime, with easy access to the bustling shops and restaurants along Dundas and Queen Streets. It's also a short walk to the iconic Trinity Bellwoods Park, offering plenty of recreational opportunities right at your doorstep. The property's taxes are $12,159.90 Canadian dollars, reflecting its prime location and upscale features. For those interested in exploring this beautiful home further, more information is available through Sam McDaddy Real Estate Inc. brokerage. That's it for our Ontario House of the Week. It's a perfect example of how modern renovations can breathe new life into classic homes, making them ideal for today's buyers while preserving the architectural heritage of Toronto's neighborhoods. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.